Phemex, please protect, get a brace and find your place.
Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 3rd, 2022, and a big move for Bitcoin is very, very close. It's very near. And here is why. I'm going to show you two big, very important indicators as to why this is. If that interests you, then watch until the very end. Guys, I'm very excited for today's episode. I've never shown you this analysis before, okay? So first and foremost, let's look at the 4-hourly time frame, okay? As we can see, this range that we've been in since about the 26th of August, which has kept us in for about 8 days now, is crucial for us to break to the upside. It's crucial for us to go to the upside from here because we would essentially be making a double bottom, okay? It's an asymmetrical double bottom, but a double bottom nonetheless. And we've already seen, I'm not going to show you here, but in the momentum indicator in our stochastic RSI, this led to strong bullish divergence on the daily time frame. All right, so we already know that. I'm not going to rehash the price action analysis of Bitcoin as I've been doing. I'm not going to go through Bitcoin's Elliott wave analysis. We've already done that. In this video, I really want to focus on the two main indicators, of which I will speak of open interests, and we're going to use the Phemex open interests, as well as the DXY, the dollar index. And I'm going to explain to you something nobody's ever told you as to why it's so important to really understand the dollar index. And it's not different than looking at the Bitcoin chart. Yes, you heard that. The dollar index chart, okay, the DXY is no different than looking at Bitcoin chart. We're going to see as to why that is. All right. So we need to break up, and it's likely that we do break up, okay? It's likely that Bitcoin does what Cardano did, okay? You see what Cardano did here? It formed a double bottom, right? And it broke up from the double bottom, okay? Litecoin formed a double bottom, okay? And it broke up from the double bottom. Lots of different altcoins did this. We're not surprised that Bitcoin's lagging because it is alt season. Why is it alt season? We know that when Bitcoin tumbles, altcoins tumble more. When Bitcoin rises, altcoins rise more. This is when we get what we call alt season. Okay, now looking at the dollar currency index, okay, why is it so important and why is it the same as Bitcoin? What do I mean by that? All right, let's look at this chart. I've never shown this chart before on this channel, okay, and I've never actually compiled this chart before. What you're looking at here, and can I mark this up? I can't mark it up. Okay, what you're looking at, actually, let me see if I can't mark it up. Maybe I can. Let's try web capture. Okay, capture full page. You guys can't see that. In any case, what we're looking at here is both Bitcoin, right? Bitcoin is on the top, and the DXY, the basket. So basically, the dollar, the basket of currencies traded against the dollar. So the DXY is what? The DXY is the measure of strength, of relative strength of the dollar against a basket of currencies, and those currencies are usually described as friendly currencies or trading currencies with the dollar, okay? So it's basically showing the relative strength of the dollar in the world economy, okay? And so when the dollar is strong, typically that rhymes or that coincides with a strong economy, and when the dollar is weak, that coincides with a weak economy, a recession, okay? So what you can see here, these both are monthly charts, and both of these, if you can see my cursor, are showing you these charts at the same time. So I tried to line up the timeline so you can see from on the top and the bottom, the dates are lining up, right? So on the top, you see 2015 through 2023. On the bottom, you see 2015 to 2023. That's 8 years of data. All right. And each bar is a month. And what does it look like? It looks like mirror images of one another. And there's a reason for that. Okay. I want you to keep this in mind. There's a strong correlation. This is why people say there's an inverse correlation between the price of Bitcoin and the DXY. So if Bitcoin goes up, the dollar index goes down. If the dollar index goes up, Bitcoin goes down. They're inversely correlated. You can see that graphically. They're almost a perfect mirror image of one another. Look at this, pause the video if you want, prove it to yourself. All right. Now, given this information, given this understanding, let's briefly explain why these two things are so correlated. I mean, are there people out there really that think, oh, the dollar's going up and I've charted it on my trading view chart, so I'm going to proceed to sell my Bitcoin? No, that's not how it works. And so many analysts explain it that way. That isn't why it works. The reason they're so closely correlated and the reason they are inversely correlated, Bitcoin goes up, DXY goes down, DXY goes up, Bitcoin goes down, is because Bitcoin is traded using the dollar. Bitcoin is traded using the dollar. The dollar is the underlying asset. The dollar isn't the only currency in the world. However, as you well know, the dollar is the hegemonic currency of the world, okay? Most of the world trades goods and services in dollars. About 60% of worldwide trade, okay, of the entire sort of world economy is based in dollars, and countries are using the dollar as a world reserve. That's going down now, given the recent events and the rise of the yuan and the rise of the euro and stuff like that. But still, more than half of the world's economy is based on the dollar. That means the dollar is, people are trading dollars for Bitcoin and vice versa, okay? By and large. So if you look at Bitcoin, okay, let's just do this really quickly. You look at Bitcoin and it's traded against the dollar, okay? What happens when the denominator, some quick math here, not to take you, too far back in the rabbit hole down to grade school, but whenever your denominator increases, which, in this case, X is the dollar, okay? If the dollar gets stronger, what happens to the entire formula, right? The price of Bitcoin, let's say this is always one. Let's say this relationship stays equal, then Bitcoin has to drop. If the dollar increases, Bitcoin has to drop for this to stay equal. Do you understand? And when the dollar decreases, right? So let's say the dollar goes down, then Bitcoin has to increase for all things to remain equal. Do you understand? That is the relationship between Bitcoin and the dollar index. This is why they're so closely correlated. I hope that makes sense. There's nothing to do with people consciously going out of their way and selling into dollars because it's a risky economy or whatever. It's because Bitcoin is traded using dollars. That is what we call the underlying asset, what you use to buy Bitcoin and what you sell Bitcoin into, okay? So I hope that makes sense. So now, knowing this, keep this in mind. We're going to look at another chart, okay? We're going to look at the same chart of the DXY, but on a smaller time frame, okay? So stay with me now. And let's go into this one. All right, and this is a 4-hourly time frame. Actually, no. First, let's look at this chart because I've marked this one up, okay? And then we're going to switch to that other chart. They're the same chart. It's just one's more active than the other. Okay, let's go on the weekly chart. Actually, let's go on the monthly chart. And this is just a rehash. I've shown you this before. I showed you this during the live stream, actually. Guys, the dollar has been in a 5-wave impulse to the upside since May of 2011. Okay, we count 5 cycle waves here. 1, 2, 3, 4, 5. You can check my waves if you'd like. Just pause the video. You can measure wave 1, retracement of wave 2 between 382 and 618 of wave 1, extension of wave 3. Basically, if you take wave 1, retracement of wave 2, you'll see wave 3 hits between the 1618 and the 2 Fibonacci extension, right? And then retracement of wave 4, you'll see that's a run-of-the-mill extension between the 236 and the 382 of wave 3. And then you'll see wave 5 is comparably sized to wave 1. This is a garden variety 5-wave extension, okay? That count is legitimate. Now, after 5 waves, you get 3 waves. This ABC flat correction is what we're expecting, okay? And I talked about this before. Basically, you've gotten this complex or composed B wave, right? It's a 3-wave move, and it's just rounding out here, okay? So basically what I'm going to do is we're going to focus on this. Essentially, the dollar has been in correction since 2016, December of 2016. And it's a 3-wave flat correction, and we all know that if it's correcting a 5-wave impulse to the upside, the last wave is going to be an impulse to the downside. Now, question is, when are we going to get that? Whenever this happens, the dollar is going to drop like a rock. During this period, Bitcoin is going to rise. Cryptocurrencies are going to rise, right? Most stocks are going to rise, and they're going to rise violently, okay? Why? Not because somebody's out there buying crypto and buying stocks because they're master chartists, because a lot of people can't even read this chart, to be honest with you. No, it's because the dollar is used to buy Bitcoin. The dollar is used to buy stocks. Most of the world uses dollars to buy Bitcoin and stocks and other cryptos because the dollar is a world reserve currency, and 60% of all trade is done using the dollar. That's why. Okay, now let's go, guys. If you're getting value, please like, share, and subscribe. Let's go to this smaller time frame and look at this chart. Okay, let's go on the daily time frame. Now, remember, this is the same chart. Okay, don't get confused. We're just zooming in. This is the end of our 5-wave impulse. Okay, we showed you that this was 1, 2, 3, 4, 5. This was an extended 5th wave move. This is your initial break of structure, A wave. This is your B wave. This is your pivot. You should expect a quick move, and that is on the daily time frame. Basically, you're getting rejection here, okay? You're getting rejection here, my friends. When this actually moves down is when Bitcoin will move. That is when, and it's so close. We're on the daily time frame. Let's jump down into the 4-hourly time frame. What do you see? You see this region right here serve as major resistance for the dollar index, okay? It's not making higher highs, and it's strongly bearishly divergent. Let's turn on our indicators. Let's go back to the daily time frame, okay? Here you can see strong bearish divergence. I showed this during the live stream. Apologies for those of you who watched, but it's important to repeat this point. You're making higher highs in price action and lower highs on your momentum indicator right there. That's strong bearish divergence, okay? And this is coincident with our read here. 3 waves down, 3 waves up, okay? Pivot, this is your pivot. Now you drop like a rock, okay? We're on the daily time frame. Obviously, the dollar doesn't trade on the weekends, as far as I know. So once this starts up again, don't be surprised if it opens down and a strong move on Sunday Eastern Standard Time happens, because there's major resistance here and this bearish divergence plays out. This is why Bitcoin will move very soon. Is it going to move in the next hour? Is it going to move in the next day? Maybe, okay? But it's very, very soon. Now, the second reason, okay, so that was the dollar index, the DXY. We read the DXY on the large time frame. We read it on the small time frame. We could see the imminence of this move. We're going to look at open interest. What's open interest? Open interest is basically the idea that there are a bunch of derivatives contracts, right, in crypto futures and stuff like that. For instance, I have positions on leverage, okay, and there are contracts that I have with these exchanges saying that I'm gonna put $10 in, and then I'm gonna multiply those $10 by 10, so 10x leverage, and I'm betting on the price of whatever I bought to go up, okay, and so that's an open interest. That's an open contract. That's still open until which point I close the contract or I get stopped out or liquidated. Do you see what I mean? Most of the money in crypto and the world economy are open interests. It's basically like promissory notes of money. So when you see all the money in crypto, the market cap, the $1 trillion market cap, a lot of that is funny money. It's basically, I put only 10 actual dollars that I own. I'm just giving an example, but I 10x'd it, so that represents a $100 contract. Do you understand? This is open interest. And in reading open interests, you can see what's going on in the market, okay? How can you see that? So let's go to this Bitcoin shorts, okay? See here, this is reading. So we're going to read open interests by proxy, via proxy of Bitfinex shorts, okay? So Bitfinex is a big exchange. It's a big boy exchange. What I call a big boy exchange is where big money trades, like, you know, millionaires, billionaires, big companies, right? The average retail investor doesn't trade on Bitfinex. Does it mean they're always correct? No. But what we're going to do is we're going to use our skills in technical analysis to read Bitfinex shorts. On the daily time frame, you can see from August 9th, so early August, right, the shorts went up impulsively in 5 waves, like Ralph Nelson Elliott told us everything happens in, right? Any impulse happens in 5 waves. So you have 1, 2, 3, 4, 5. You have your sharp wave 2 correction between 382 and 618 of wave 1. You have wave 3 that basically represents 1618 to 2 Fibonacci extension of wave 1. And then you have wave 5 that's pretty much the same size as wave 1. Pause and check my count if you'd like. That's 5 waves, okay? What do you think happens next? After 5 waves, you get 3 waves. So 1, 2, you get your pivot, and then you get an impulse down, and you get your 5 waves down. Essentially, you're going down. Now, how are you going down? You're going to go down in 3 waves, right? That third, you printed 1 wave, you printed 2 waves. That B wave is a wave to the upside. I want you to notice the candles right here. On the daily time frame, you have bearish candles, right, with strong wicks to the upside, noting some strong resistance, strong rejection to the upside. That B wave is coming down. You can already see it. You're going to start. Once you break right here, this level of support, this is when Bitcoin starts going. Your open interests representing all the money, right, in crypto, a lot of the money, most of the money in crypto. Most of the money in crypto is funny money. Most of money in the world economy is funny money. And this is the funny money you want to track. All right? Basically, people betting on the price to go up or down. So basically what this means, this graph is basically showing us, this chart is basically showing us that the number of people betting on the price going down and the number of contracts, the amount of money betting on the price to go down is going to go down. Basically, that's meaning a lot of people, a lot of contracts are going to start betting on the price to go up imminently because you're about to break the shorts. You're basically at the top. You reached resistance for shorts. Shorts have reached resistance. They're going to plummet, which makes moves or makes room, which makes room for longs. I hope that makes sense. Guys, if you got value, please like, share, and subscribe. I don't see anyone else talking about this in this way. Obviously, people are talking about open interest. People are talking about DXY, but I've never heard such an explanation. Hope this was helpful. Hope this was useful. Have a great Saturday. And I hope the price does indeed move soon. Take care. I'll see you tomorrow. Bye.
Only take a sec for the damage to begin. Wreaking havoc on eardrums. We cold getting dumb, getting crazy style. Late night, high division, we be moving with precision. With 10 spots popping off, making some decision about hitting them one at a time with these ill rhymes. My love at the door, free drinks hitting the floor.